Vinod Karki of ICICI Securities. Vinod, a quick view on numbers so far, and also if you could add, the general view is that this quarter onwards, and in many cases this quarter also, base has actually broadened a whole lot. So having very high growth outperformance on the top of expanded base from here on could be an issue, and hence valuation may start looking slightly stretched. What are your thoughts on earnings so far and this argument in particular?
Yeah, thanks, Ajay. So I think the basic color is on expected line. What is happening is the cyclical companies related to the domestic economic recovery, be it, let's say, autos or financials. So far, I mean, industrials, few have given, but their results are good. But the general capital goods and other industrials are yet to start giving the results. But the clear thing is that the domestic cyclicals either are in line or slightly better, while the what you should say, the defensive, which is IT, for example, even HUL, I mean, the numbers were a little underwhelming in my view. So the broader texture of the economy and therefore its reflection in market continues, where we have been saying that the domestic cyclicals led by the investment cycle picking up and some of the discretionary consumption picking up, that's continuing. The expensive defensives are seeing short-term growth downgrades also, and they remain expensive. So that narrative continues, I think.
Vinod, what are your thoughts? I was just looking at your report. You're observing that FPI buying by the way, because FPI overall have been large sellers for over a year now, and right now also nothing has improved. But in particular, capital goods, industrials, financials, power, telecom and realty, somewhere they are actually building positions. Which in this entire list to you appears to be most sustainable theme, or the cycle may be prolonged from here?
Yeah, first of all, the FPI flow picture itself, if you look at from a 1 year perspective, they have been clear buyers. I mean, in between, there have been bouts of selling. But if you look at the trailing 12-month FPI buying on a cumulative basis, it has been a reasonably good amount of net buying. In fact, if you look back in history, this is probably one of the few instances where the DIIs and FIIs are on an equal footing largely in terms of net buying. And that's what I think is keeping our markets relatively a little bit on the expensive side. But yeah, and last year, if you see, when we broke it up between large, mid, and small, it seems that the FPIs are warming up to the broader market. They're buying in small and mid caps actually exceeded the large caps, which traditionally has been their stronghold. They've been traditionally buyers of large cap Indian stocks. But over the last year or so, we saw more buying in mid and small as compared to large cap from FPIs.
Right. What about earnings growth? Are you seeing any inflection point in any spaces which we spoke about going forward?
Yeah, so I think earnings surprise, or rather what you should say, over the last 1 year, where are the earnings upgrade coming and where is the disappointment coming is absolutely clear. We see more sustained earnings upgrade coming from domestic cyclicals, whereas the defensive sectors are seeing, be it largely in IT FMCG, pharma would be a mixed, but largely the IT FMCG seems to be disappointing. Domestic cyclicals are where the growth is coming. But having said that, well, the point you initially said, I think that is true, that we came from a low base and earnings growth looked very high when it came from the low base. Going forward, I think this will start tapering down. Growth won't be in their very high teens, I mean, in the 20s or something like that. It may go to 15, 16% on the Nifty, and maybe for the mid cap, small cap, a few percentage higher. That's how we look at it right now, broadly.
You also make a point that In fact, we all see it around us anecdotally as well that the number of households having financial assets is witnessing a sharp surge. In general, affluent households' preference is coming out of real estate and gold and tilting on even FDs to certain and tilting towards equity. That is a problem, a good problem to have or not, don't know, but it's making the flows very structural. What in your overall recommendation list to your clients are your overweights on market and flows related infrastructure? Is it the exchanges or some technology company? Is it the AMCs? Is it the wealth managers? Which of them do you see them best plays on this theme?
Well, asset management companies obviously are structural plays, and insurance companies, both, I mean, from asset management or the underlying insurance business, they are good. And some of these companies where, the exchanges, I mean, for example, they are also a proxy to that. So I think the whole capital market basket, I would say, looks good from a structural perspective. One should just be mindful of not paying too much for this growth, because that would mean that you would see some kind of what I should say, if there is any in between kind of slowdown, then you could face a lot of disappointment because the valuations won't be there for any. I mean, there won't be any comfort on valuations. So I think valuation is something that you should watch out for. And in general, I think capital market players, it's a structural story, no doubt about it.
Before I let you go, a quick word, because we will be winding up the financial year earning now. We will all take stock of how the Nifty earnings fared and the current and the forward kind of valuation number for Nifty. I want to understand where will the delta come for. Do you think we'll land up around 1,000 rupees per share this year, and then next year it is looking 1150, or what's your current number which you will be taking a review on?
So when you say current, I think you're referring to FY24. So FY24, I don't think there would be any large disappointments. So that number would be there, that just below 1,000, I would say. But I think going forward, we expect the headline, what you should say, the index growth in earnings to be around the 15-16% mark, and bulk of it driven by domestic cyclicals. That's the current view right now.
Right. All right, Vinod. Great chatting. Thanks so much for your thoughts. We will be catching up once again very soon.